Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 13th, 2025, and we're diving into Under Armour's latest earnings report for the fourth quarter and full fiscal year 2025. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Under Armour has been undergoing a strategic reset, and this report gives us a glimpse into how those efforts are shaping up.
Revenue and profitability overview. Let's start with the top line. Under Armour reported a revenue of $1.2 billion for Q4, which is an 11% decrease compared to last year. However, the gross margin improved significantly. John, can you elaborate on these figures?
Absolutely. While the revenue decline is notable, the gross margin increased by 170 basis points to 46.7%. This improvement is primarily due to supply chain efficiencies, lower product and freight costs, and a reduction in direct-to-consumer discounting. It's a positive sign that Under Armour is managing its costs effectively, despite the revenue drop.
And what about the earnings per share?
The adjusted EPS came in at -$0.08, which is slightly better than the forecasted -9 by 12 analysts. This indicates that Under Armour is performing better than expected in terms of profitability, even amidst revenue challenges.
Segment and product performance. John, let's break down the performance by segments and products. How did Under Armour fare in North America and internationally?
In North America, revenue decreased by 11% to $689 million, while international revenue saw a 13% decline to $489 million. The Asia-Pacific region was particularly hard hit, with a 27% drop. On the product side, apparel revenue fell by 11% to $780 million, and footwear revenue declined by 17% to $282 million. However, accessories saw a slight increase of 2% to $92 million.
It seems like the international markets are facing significant challenges. What could be the reasons behind this?
The decline in international revenue is largely due to currency fluctuations and regional market dynamics. The Asia-Pacific region, in particular, is experiencing a slowdown, which has impacted Under Armour's overall performance.
Operational efficiencies and future outlook. Moving on to operational aspects, Under Armour's selling, general, and administrative expenses increased slightly. What does this tell us about their operational efficiency?
The SG&A expenses rose by 1% to $607 million, which is relatively modest. This increase includes transformation and litigation settlement expenses. The company is actively working on its fiscal 2025 restructuring program, which incurred $16 million in charges this quarter. Additionally, inventory levels are down by 1% to $946 million, indicating better inventory management.
And looking ahead, what is Under Armour's outlook for the next quarter?
For the first quarter of fiscal 2026, Under Armour expects a revenue decline of 4 to 5%, with a slight increase in gross margin. They are also forecasting an adjusted EPS of 1 to 3 cents, which suggests cautious optimism amid a complex macroeconomic environment.
CEO strategic vision. Under Armour's CEO, Kevin Plank, has been vocal about the company's strategic reset. What are his key messages from this report?
Kevin Plank emphasized that Under Armour is laying the groundwork for a more focused brand. By elevating products, refining their operating model, and tightening distribution, they aim to reignite brand relevance and position the business for sustainable, profitable growth. This strategic vision is crucial as they navigate the current challenges.
It sounds like Under Armour is committed to long-term growth. How do you see this playing out?
The focus on brand relevance and operational efficiency is promising. If they can continue to manage costs effectively and adapt to market changes, Under Armour could see a turnaround in the coming years.
Key takeaways. In summary, Under Armour's Q4 results show a company in transition, with a focus on improving profitability and operational efficiency. Despite revenue challenges, the improved gross margin and better than expected EPS are positive signs. Thank you, John, for your insights.
Thank you for having me. It's an interesting time for Under Armour, and their strategic initiatives will be key to watch in the coming quarters.
And thank you for watching Smart Stock Watch. If you found this analysis helpful, please like, share, and subscribe to our channel. We'd love to hear your thoughts on Under Armour's performance in the comments below. Until next time.